The market fails to follow through and we bail on our trade. This is Invest with Jacob. Okay guys, so the market failed to make its fifth wave up today and turned into a choppy mess. Because of this, we decided to protect our capital and got out of our trade at break even. There was a little bit of confusion about why we exited the trade, and I'll explain all that in just 1 minute. But first, if you're new here, welcome to the show guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave to break down the S&P 500. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay guys, so there was a little bit of confusion about why and when we exited our trade today. And the biggest reason is the market entered a phase of indecision. It was choppy and unclear on which direction it wanted to go. And when that happens, there is no high probability path. It could go higher, it could go lower. And in those times, it is best to protect your capital and wait for it to play out and enter the market at a stronger point. Now, to see it in a technical fashion, let's jump into the charts and take a look. Okay guys, so here we are on the 5-minute futures chart. And the first thing I want to address is this move up off of the B bottom, or what we think is the B bottom for now. So this move up, many argued, was a 5-wave move up. And there's just no clear 5 waves here, guys. There just isn't. No matter how you count them, you cannot get 5 waves that satisfy all of the Elliott rules. You get a clear wave 1 up and a clear wave 2 down, and then you get a clear wave 3 up, and that is it. The reason it is only a clear wave 3 up off of this 2 is you have to have 5 waves inside of your wave 3, and you have 1, 2, 3, okay, waves up. Even if you said this was 3, 4, 5 right here, you still don't have enough to make this a clean 5 up. It doesn't meet the Fibonacci requirements, and it's just not what we're looking for in a 5-wave movement. So this is a 3 count up, which is corrective so far until we make wave 5 up. So as it pulled back today, the first red flag is that wave 4 should not dive below the 1.0 extension of waves 1 and 2. So how do we know it did that? Again, we use our Fibonacci tool here. We come to the bottom where we started wave 1. We go to the top of wave 1 right here. We pull back to the bottom of wave 2, and then we pull it across so we can see. Okay, and our 1.0 extension was 43.95.25. And you can see right here that the wave 4 broke through that. Now, is it possible that it can break through and still complete 5 up? Absolutely. But it becomes much less likely when it breaks the 1.0 extension down that it will follow through and complete the pattern. So that was the first red flag. Now, just for an Elliott Wave Theory rule, technically wave 4 doesn't truly invalidate until it moves into wave 1 territory, so it does have room to come down. But again, once it breaks this 1.0 extension, we know that it is much less likely to complete 5 up. The second thing was the bounce off of this low. So we got our bounce up, and then what we got is a bunch of overlapping waves. So this move up, this wave comes back and overlaps this wave, and then it's only 3 up. It's a very corrective movement. So because of those two factors, the fact that we broke through the 1.0 extension on the wave 4 down, and the fact that this bounce was clearly corrective up, okay, because of those two factors, I decided when we got back to break even here, we would exit the trade and protect our capital, because this is an indecision point. All right, this is a place where the market could push higher or it could move lower, and with the corrective bounce, it was much likely, in my opinion, to go lower, which it did. So we protected our capital. We'll stand on the sidelines till we get a much more reliable entry point, and then we can find a better trade to get into. And again, this is why you have a trading plan, guys. Okay, so as we can see, the market moved down and sold off into the close down here, and now it's grinding back up. This doesn't look very good as an impulsive structure, okay? To be honest with you, this looks like it's starting off pretty corrective. There's overlap here, and I would expect more down move before we get another move up. So the key levels that we're watching here, guys, are yesterday's low. That's the first one. If we break below that, okay, we could be in a much larger triangle that plays out and still has a bullish setup. And then the next key level is this low down here at 43.65. If we break below that, it is very unlikely to complete the bullish path up towards 45.50. So this is kind of the make or break for 45.50 down here. If it breaks this, we're probably hitting 43.50 at a minimum, and could go as low as 43.07. So we're looking for this low to hold. If it doesn't, we're going to see a lot more chop over the rest of this week before we try to break out to the upside. And if it doesn't hold and it gets down into this area and doesn't hold, then we're looking at a much deeper move down. So guys, if you like the information that I gave out in this video and you want real-time market updates from me while the market is trading, you need to get in my Facebook group. There's a link down in the description. Go ahead and click that link. It'll take you over to Facebook, as you can see here. There'll be, once you get in the room, there's an announcements tab. Okay, and when you scroll down the announcements tab, you'll see our documented trades, so you can see what we've been trading, and then you can see our Slack channel down here. Click that link and get into my chat channel. It's free. All you have to do is one thing, just one thing I need from you. You gotta subscribe to my YouTube channel. So hit that subscribe button down below, get over in my Facebook group, and then into Slack. And in there, guys, I give you all of the updates during the day. I give you our buy alerts, our sell alerts. I answer all your questions. It's a great group of people in there trading, some very talented traders. So hit that subscribe button, come over to my Facebook group, and let's make some money together. Okay, guys, so key takeaways for today. We're letting this sloppiness play out. Ideally, what we're looking for is a 5-wave impulsive movement up out of here, and then a pullback that we can buy the bottom of, a wave 2, and then we're looking to trade up towards that 45.50 target. Okay, if we do not have that, if this breaks down to the low side, then we'll have to watch and see how this plays out, because there could be more consolidation over the next few days. All right, guys, that is the market update for today. I will talk to you tomorrow.